Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that growth in world trade has stalled. But first, Wall Street jumped about an hour ago, up about 1.5% after Federal Reserve Chairman Jay Powell said that their program of gradual interest rate hikes are meant to balance risks as it tries to keep their economy on track. This new assertion of a rising rate track caught many by surprise. Not only did Wall Street jump, but bond yields fell, and the US dollar fell sharply as well, boosting commodity currencies like the Kiwi dollar. Sales of new single-family homes in the US tumbled to more than a 2.5-year low in October amid sharp declines across the country. Further evidence that higher mortgage rates there are hurting their housing market. Meanwhile, the US trade deficit got sharply worse in October. For goods alone, it grew to $77 billion. That's just in the month, up from $67 billion in the same month a year ago. Whatever they're doing to fix this just isn't working. The upcoming G20 summit in Argentina this weekend may be the next place where the trade wars play out. The OECD is reporting that, excluding large oil exporters such as Russia and Saudi Arabia, G20 trade was flat in the third quarter of 2018, suggesting that the steady expansion seen over the past 2 years may have stalled as recent protectionist measures begin to bite. In Shanghai, their equity markets rose more than 1% in yesterday's trade. In the UK, their central bank has warned a no-deal Brexit could send their currency plunging and trigger a savage recession, worse than what they got during the GFC. The Bank of England said the British economy could sink by 8% in the immediate aftermath if there was no transition period, while house prices could fall by a third. At the Aussie Hayne Commission, they're moving on to target ongoing advice fees, so financial advisors, like accountants and lawyers, have to provide a service before they can invoice their customers. US Treasury 10-year yield is lower today at 3.05%. Their 2-10 curve, however, has risen to almost 25 basis points as the short-end rates fall. Gold has recovered $8 from yesterday's drop and now at $1,220 an ounce. US oil prices are unchanged overnight at just over $51 a barrel, while the Brent benchmark is just on $60 a barrel. And the Kiwi got that turbocharged boost against the greenback to now be at 68.8 after that Powell speech, up 1%. On the cross rates, we're a little changed at 94 Aussie cents and up to 60.4 euro cents. That's put the TWI up to 73.2 and a 5-month high. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.